Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets. For the week ending Friday, April 24th, 2026, we'll explore key market trends and milestones. Kicking things off, I'm Max Profit. Major indexes showed mixed performance in the weekly recap. The S&P 500 index closed at 7,165.7, up 39.2 points from the previous week, marking a new all-time high. Despite a very strong positive trend, the Dow 30 index declined, closing at 49,230.72, down 216.72 points. The broader market breadth revealed gains in several key indexes. The Nasdaq Composite Index surged with a 1.5% increase, with 2,095 advances to 875 declines over the week. Significant upward movement was also seen in the Russell 2000 Index, closing at a new high with 1,534 advances to 302 declines. Looking at returns, the Nasdaq Composite Index stood out with a strong one-week total return of 1.5%. driven by tech gains. The S&P 500 index continued its positive trend with a 0.55% weekly return, fueled by gains in key sectors. Evaluating annual returns, the Nasdaq Composite Index showcased a robust 10-year annual return of 17.6%, leading among the indexes. Meanwhile, the Dow 30 Index achieved a solid 10.58% annual return over the same duration, reflecting a steady long-term upward trend.
Checking out best and worst performing equities, I'm Penny Stock. Akanda shines with a close at 12.23, up 8.69 this week, marking 245.4% growth. DIH Holdings, U.S., Inkhorn, Class A, also stood out with a 900% leap, though it closed flat at a penny. Among the week's shining stars, MaxLinear saw consistent growth with 5 weeks of upward movement, closing at 60.32, a 34.5 gain. POET Technologies also had a strong week, recording a new one-year higher close at 15.10, up 7.84 this week. Highlighting annual returns, POET Technologies recorded a 2.72 ARR over 10 years despite lower recent returns. MaxLinear showed resilience with an ARR of 5.25% for a year, affirming its upward trajectory. Among big caps, Advanced Micro Devices led with a 24.9% increase, closing at 347.81, marking its 7th consecutive week of gains. Another standout, Texas Instruments soared 20.5%, recording a new all-time high at 277.14. Big cap gains were notable as United Rentals surged 22.3% to 974.41. In similar fashion, Intel continued its 4-week streak of increases, achieving a 20.4% rise to 82.54. Examining long-term gains, Advanced Micro Devices impresses with an annual rate of return of 268.17% over the last decade, crowning its enduring performance. Meanwhile, ON Semiconductor recorded a 146.25% annual rate over the same period. On the flip side, Carisma Therapeutics hits an all-time low, closing at zero with a 98.7% drop. Also sinking, Shanson International Holding recorded a decline of 92.4%, closing at just 0.18. Weekly returns show Hub Cybersecurity plunging 75.8%, marking new lows. Meanwhile, Z-Space extends a 9-week streak of losses with a significant 67% decrease, bringing it to 0.44. In the world of worst performers, Carisma Therapeutics hits rock bottom, with a close at zero, dropping by 3 cents, down nearly 98.7%. Notably, it recorded a new all-time lower close. This showcases a very strong negative trend, with strong downward volatility amidst flat price movement over 133 days. In this batch of big-cap stocks, Charter Communications leads the declines with a drop of 23.8%, ending at 180.13. It reached a new one-year lower close, while Tractor Supply also registered notable losses of 18.3%, closing at 36.74 amid strong downward volatility. Continuing with the big caps, Lululemon Athletica fell 14% to close at 143.80. It's experiencing a very strong negative trend with some downward volatility. Meanwhile, Northrop Grumman declined by 13.5%, ending at 575.11. Lastly, Lockheed Martin dropped 13.2% with a close at 513.45. Despite the current downturn, its 10-year total return still boasts a positive annual rate of return of 8.51%. Such mixed negative trends indicate an ongoing challenge in staying afloat in the stock market.
And now onto U.S. sector performance. The energy sector closed at 870.9, climbing 3.2% with mixed positive trends. The technology sector surged 3% to 6,136.62, recording a new all-time high, while closing up for 4 consecutive weeks with a very strong positive trend and some upward volatility. In the energy sector, one-day declines outweighed advances, yet overall, the week's advances were significantly greater than declines. In contrast, the technology sector saw notable one-day advances outpacing declines, contributing to a strong upward momentum. Interestingly, consumer defensive and utility sectors had mixed results, highlighting this sector's varied performance. The technology sector's month-to-date return stands out with an 18.97% gain, displaying vibrant momentum. Energy sector, however, posted a negative month-to-date return at -7.76%, contrasting its positive weekly rise. Noteworthy is the basic materials sector, with a monthly return of 4.35%, indicating a strong positive trend. Over a decade, the technology sector boasts remarkable growth with a total return of 749.12%, translating into 23.84% annually. The utilities sector follows with a solid 95.28% return, demonstrating consistent, albeit lower growth. These figures affirm technology's leading position and highlight the sector's enduring strength.
In the U.S. energy sector, Baker Hughes soared to a new all-time high, closing at 68.94, rising by 9.16. Halliburton followed with strong upward momentum, gaining 3.21 to close at 40.36. Both companies exhibited a very strong positive trend in their weekly performance. Continuing with the energy stocks, Baker Hughes saw a significant one-week total return of 15.3%. Meanwhile, Halliburton returned 8.6% over the same period. These returns highlight the energy sector's robust performance for the week. Looking at longer-term gains, Baker Hughes marked a compelling 10-year annual return of 7.8%, while Diamondback Energy showed impressive growth, with a 10-year annual rate of return reaching 8.8%. These figures underline the strength and resilience in U.S. energy stocks over the last decade.
In the latest performance review, the healthcare sector closed at 1,680.48, dropping by 53.62 points, or 3%. This marks a mixed negative trend. The real estate sector also closed down despite recording a new one-year higher close earlier in the week. Among the sectors, the healthcare sector experienced significant declines, with one-week advances at 257 compared to 693 declines. Despite the downturn, daily advances outpaced daily declines. Meanwhile, the financial services sector showcased a similar weekly decline pattern, with advances lagging behind declines. Over the past week, the healthcare sector suffered a 3.1% total return loss, indicative of a struggling trend. The real estate sector registered a modest monthly gain of 7.3%, showing resilience with a positive long-term outlook despite recent declines. Examining annual returns, the healthcare sector yielded an annual rate of return of 7.29% over 10 years. Meanwhile, the communications services sector boasted a 111.54% ARR over the same period, demonstrating strong growth potential despite short-term challenges.
In the healthcare sector, both HCA Healthcare and Cooper Companies have closed down for 2 consecutive weeks. Danaher hit a new one-year low close. Each of these stocks is in a strong negative trend, with significant downward volatility noted for HCA. Trailing U.S. healthcare stocks are facing steep declines, with one-week total returns well into the negatives. Bio-Techne managed a slight positive move month to date, but other stocks are in negative territory. The most significant negative shift is seen in HCA, which shows strong downward volatility. Long-term performance in the healthcare sector reveals mixed returns. Danaher and Cooper Companies show negative 3-year total returns, while HCA has a considerable 10-year annual rate of return at 18.24%. These stocks continue to trend downwards with notable volatility.
Thanks for watching. I'm Max Profit, along with my AI co-host, Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.